Welcome everyone to the channel. Hope you're having a wonderful day. The market was up nicely this morning, but as you guys all saw, it ended up nearly flat towards the end of the day. It was quite a nasty sell-off, wouldn't you agree? It was kind of
Yeah, it
weird that
was.
after that huge presidential alert went out, maybe the algos or something reacted and they thought it was something bad and then they started selling. Like if you look at the chart during the time that happened, it went down. I mean, it's just like a conspiracy theory, but I don't know. But
I
probably
mean,
the more
definitely makes
reasonable
sense.
theory is that the 10-year yields were spiking due to all the positive economic data that we have. They've been the highest since what, 7 years, and also the market was right at that resistance of that 2940, which is a really hard resistance to get over. So it faded off that. So I guess the market's seeming to care about these yields, and we'll see what happens to the yields in the banks when we get the jobless claim numbers and the non-farm payroll numbers this week. You saw the banks move up, right? You got JP Bank of America, even Goldman Sachs. That pig Goldman Sachs was going up, but it had difficulty at that 230 level, and it did fade around $2. So the thing with the banks and yields is, yeah, yields will go up. It's good for the banks, but the issue is if the overall market goes down, so will the banks. So you have kind of a weird scenario there. But yeah, we'll be talking about the banks. We'll talk about MPC, Marathon Petroleum, Google, and CTRP. You'll be taking care of CTRP and JP Morgan, right?
Yes, sir.
Yeah, so but before we begin, I'd like to ask you to subscribe and share the video with your friends, and I want to remind you to always do your own due diligence, and this is not financial advice. So let me begin. All right, Marathon Oil. So if you look at this chart, quite beautiful. Oil's been doing really well. The stock was up nicely, and then on this date right here, it was the 28th, that was the last day of the quarter. Saw a huge end of the day selling, and there was a huge imbalance. So they spiked the stock all the way down to $80, and at that point, you saw some nice call buyers coming in for the November strikes. I got in as well because when you look at this chart, let me look at the hourly. It was right up there and just kept going down over the past couple of days. And with oil going up, I'm thinking, okay, this is weird that, these stocks should all be going up. So I did take that dip. It was a pretty good level to buy that, the dip over here. And it went out to the 85s in November. And those are currently trading at $4.50. Got them at $1.80. I did sell them in the mid threes. So I'm done with this trade. But if oil keeps ripping higher, I do see this stock going to the $90 to $95 level. First, it needs to clear this hurdle of 88, which it previously had a couple days ago or last week. And if that happens, I do see a nice run to 90 to 95. But everyone has to manage their own account. Everyone knows their own risks and whatnot. So it's up to you what you do. But this is what I see. And then this other trade that I put on. So, like, I tweeted on Twitter that I don't really advise people to counter trend. I mean, you know all about counter trend trading, right? It's a fool's game. So,
Yeah.
yeah, I just took a shot here because, making too much money right now, right? But the futures are down quite nicely. I saw that nice sell-off into the end of the day, so I was like, okay, why not, take a shot here. Amazon was failing, and a whole bunch of other techs were fading. And futures are down around 11 handles right now. So for this Google trade, you've seen this resistance come up multiple times throughout the past, this 1225 level. So what I do think is if 1214 breaks over tomorrow, it can get to the 1120 or 1225 and over that 1230 and then 1238. Those levels to the upside, but to the downside, keep eyeing the 1200, 1190, and 1168. So I grabbed the puts for next week actually. The 1200s, they were around $10. I'm targeting, if this breaks down, I'm targeting around 1175 for next week. We'll see if they really rotate out of technology. And if they actually do, I do see a nice pullback in Google. So I'm targeting that 1175 level. And, the rest of tech is weak. Facebook actually had a nice recovery, but obviously they're in the eyes of the government and whatnot because of all the issues they've been having. Did you want anything to add to Google? Alphabet?
Nope, that was good.
Yeah, so I mean, the 1200 puts, they're around $10. So if this stock does get to 1225, expect these to go down 50%. and that's what my stop loss is. So I'm watching this really closely tomorrow. I mean, the futures are down, so we'll see how it opens up. And I'll switch it over to you. You want to talk about those banks and CTRP?
Yes, sir.
Alrighty, and we're on your screen. Full screen that thing.
So instead of CTRP, I'm gonna go ahead and talk about Devon Energy and CTRP,
Sure.
but I'm gonna go ahead and talk about CTRP. Yeah, I got you. We did talk about CTRP in our previous video. I'm just gonna give you a quick little update on it. CTRP continues to be strong as it did have a strong breakout, and it is going. It's
moving
along.
Not
getting a lot of it's just moving along. I don't know.
The China names are up. So
China names are bouncing. They bounced today, so therefore CTRP's also bouncing. My target on CTRP is still the 40. I did in the morning. I did get some $40 strike calls for. I was going to get them for the end of October, and then Kevin recommended me to get them way out. So I got them for around mid. I got them for mid-November because they were a little cheaper than the December ones, and I think that my goal is to sell before earnings anyways, and I think $40 will hit. So once I get profit, I'm most likely going to roll them onto just some maybe some really close out of the money calls, and just maybe play the run up, see how it does before earnings, and then maybe play the earnings as well, some degenerate earnings. Because if you guys want to see my explanation for that, it's more so in the first video, but definitely check that out. Today we also had oil with the
oil's on a tear.
Oil inventory today. It came in much higher than expected, and oil shot up today and is making more new highs. And Devon Energy is at some support here. Previously broke out and retested once, and we're just back in that same price zone at 39.40. And then from there, I think that we're going to be continuing to the top of this range. Once we break out of the 41, you're going to want to see it just continue higher and chug higher, because this is moving much slower than oil, and I think that it's going to start picking up pace here soon, and people start to understand that and take that into account.
Yeah, so on Devon Energy, it's quite interesting to see. On 9/14, I saw around $1 million order for the 2019 January calls, and then the next day, or 4 days after, on the 18th, you saw about $1.2 million worth of calls on the 44 strike for the same line on January. And then on 9/20, saw a 300K all buy order for the $42 strike for April. So they're betting long on this one.
Yeah, long term. So long term oil, what do we think about that? I think long term oil is definitely playing this channel, and its target is definitely $80 at the rate it's moving. And from there, I think it may even just break out of this channel and continue to chug like way higher, and just go and gun it for 88, 92 area, and then hopefully retrace from there. But oil is just really bullish. I wouldn't really bet against it, and just go with the trend until the trend is not your friend.
The trend is your friend. Unless you're me when you're playing Google puts.
Lastly, I just want to go over JP Morgan. JP Morgan, third time coming into this 113 price point. Last time it was FOMC time. It came into here, dipped a little bit, and then it later had a delayed reaction and shot up. This time FOMC happened and it fell, and it bottomed out right now, which was say like 3 to 4 days after FOMC. And I believe that JP Morgan is as it's holding this breakout, it's gonna continue higher and head for more highs. And I was targeting 120, and my options expire towards the end of October, so I'm gonna look to get out of those.
Or you could roll them to a deeper strike or further out strike.
Roll them if I can get enough, decent amount of profit, or just.
Yeah, the fins were quite strong today. You saw a lot of call buying in the Bank of Americas. They went in really hard on the monthly Octobers for the 30 strike.
Yeah.
About $1 million worth of orders.
With the U.S. yields spiking like crazy and the U.S. dollar spiking like crazy.
Powell has some comments after too.
Yeah, you did have some. There's generally correlation with the U.S. dollar and banks and the DXY. Here, what you see is like they presented a head and shoulders pattern, and this fooled many traders. And they did go lower, right? And they did come into this support. But what people don't understand is that once we had such a strong breakout, and I mean the fact that we broke over this whole consolidation range and came back into it and just held this very top, and we didn't like need a deeper retrace anywhere down into like here. Means that DXY is still really bullish, and there's NFP numbers coming out this Friday, and I'm expecting this to just continue running higher. It made a first wave higher, and I think it's going to make a second wave.
I'm interested in seeing how the dollar reacts to these numbers and how the yields react again to the numbers.
Yeah,
because this is going to be interesting. Like if the banks go up and the market's selling off, it's going to be an interesting scenario. The market's going to start caring about these yields. Because, you know, if it's not Trump and tariffs, it's Greece and Italy and Brexit or
it's always something.
Then it's yield. You know, it's something. It's got to be something. Yeah, so that's what we have. You have anything else to add?
Nope.
Hey, you want to pull up the S&P actually?
Yep.
S&P chart. So right now futures are sitting at like 29.20ish or so. So yeah, towards the end of the day we did fade quite hard.
Yeah. The market had quite a big fake out, and I think that if we
right at that 29.40 resistance,
if we dig down deeper into like 2900 again, I think that'll be fine. I would be fine with looking for that to hold and checking out how that holds. But I think this is just like a final shakeout before we have a bigger rise on the horizon, and like a little tech shakeout, a little everything shakeout, and then big money will be able to get in their positions again and shimmy, you know.
Right. So I was explaining to you, remember, like I don't think they'll crash the whole market overall, but they'll go sector by sector and correct it.
Yeah.
Roll out. Rotate out. So that's what we'll see. We'll see if that holds true.
Most definitely.
So yeah, with that being said, we would like to conclude this video. If you enjoyed it, please share with your friends, like and subscribe. Check out our other videos, and I want to remind you that this is not financial advice and to always do your own due diligence. Thank you.